please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Wall Street closed mixed. We had yields on the US government bonds. They in fact gained. And in fact, the Nikkei, that's under some pressure today. It's down close to around 1.5%. It's actually moved to the low point of the day because it started off with a cut of around 100 points. Then, in fact, we were down close to around 250 points. And in fact, now if you pull up the intraday chart, you'll see that that market has moved to the lowest point of the day. Even the Kospi, in fact, is under some pressure. That market as well was down close to around 1%. So that's moved lower as well. And the other couple of markets, I think, they as well had started off with a bit of a negative tick. Though the Nikkei as well as the Kospi, those losses are far more than what we're seeing on the Taiwanese as well as the Straits. But the SGX 50, well, we don't just have the global cues. We also have some domestic cues and the afterthought of the budget. So now, in fact, it's indicating maybe a 140-point downtick is what we could kickstart trade with.
Okay, well, not looking good for the SGX right now. Over 100 and almost 150 points in terms of a decline is what we are seeing on the SGX. But let's tell you what happened on Wall Street. One of the key reasons why we could see the decline back home as well is because Wall Street stocks closed lower in what was another choppy session for them. The S&P 500 declined 0.1%. NASDAQ ended 0.3% lower. The US 10-year yield spiked, hardened to the highest level that we've seen all the way back since April 2014. One of the yields also spiked to around 3%, something the levels and the 10-year was at around 2.79% in yesterday's trade. CNBC's Hampton Pearson gets us a wrap of all the action on Wall Street.
Stocks venturing into negative territory in afternoon trading, shedding most of the gains from earlier in the day. Losses in retailers, restaurant chains, and other consumer-focused companies outweighing gains in financials and other sectors. Investors were sizing up the latest company earnings and outlooks. Bond prices fell, sending yields higher. Crude oil prices rose. At the close, only the Dow finishing in positive territory, up about 37 points. The S&P down less than 2 points. The NASDAQ down by about 25 points. So many earnings reports, some household names disappointing. United Parcel Service falling 7% after saying higher costs impacted business in the fourth quarter. PayPal down more than 6% after saying eBay is switching to a different payment processor. As for eBay, it shot up nearly 15% after the e-commerce company gave a strong forecast for the current quarter. Lots of holiday cheer over at MasterCard, the stock hitting an all-time high after holiday shopping boosted quarterly earnings above estimates. The winning formula? More people swiping credit and debit cards for larger amounts worldwide. A different story for Alibaba, the Chinese e-commerce giant. Its shares down nearly 4% despite strong earnings. Bond yields, bond prices fell. The yield on the 10-year Treasury climbing to 2.78 from 2.71 late Wednesday. Oil and gas, benchmark U.S. crude up $1.07, 1.7%, closing $65.80 a barrel on the New York Exchange. Brent crude 1.6%, 69.61 the close in London. The dollar rose to 109.47 on the yen versus 109.11 on Wednesday.
All right, and here is some opinion coming in from Jeremy Siegel of Wharton School, who says markets are unlikely to mirror the gains that we've seen in 2017.
You know, we haven't had a correction in a long time, and when you have a lot of momentum players, that's what you eventually get at the end, is some correction where people said, okay, I've made my money, the game is over. You know, it's hard, we all know in the short run, trying to predict when, when the movements are going to be, where they are. But I think overall, the market is not going to be up as much in 2018 as we saw in 17. Interest rates are going to go up, but not that much up. The opportunities, PE ratios are higher, but they deserve to be higher. And I think people are still going to be really interested in income-producing stocks because bonds are going to be falling in price, and they're going to say, where is the income from the stock market? And there's still a lot of stocks giving 2.5%, 3.5%. I think those will still be popular.
Well, the frontline European markets, they ended lower. Investors reacted to corporate earnings. They also monitored losses on Wall Street. The German DAX, that was the big underperformer. It ended with a cut of close to around 1.5%. The telecom space yesterday was the big underperformer. in the European markets. All the three frontliners, though, they ended with cuts. But if you take a look at even the peripheral indices, I think the Portuguese index should come up for you. That ended with a cut of close to around 1% as well. On the data front, though, the factories across the Eurozone, they grew stronger in January. The IHS manufacturing PMI, that came in at around 59.6. That's slightly lower than the number that we got in December. That high was at around 60.5. So European markets ended on some pressure. The emerging markets, though, they did quite well. The Russian and the Brazilian index, both of them ended in the green.
All right, and in the currency space, let's tell you what happened there. US dollar took a hit against a basket of currencies as investors digested a slew of economic data across Europe. The dollar index, which tracks the greenback against a basket of 6 major rivals, holds just above 3-year lows.
And in the world of commodities, then, NYMEX crude prices gained for a third day as data reports suggest that strong compliance with output cuts by OPEC producers. That's why I've seen Brent crude prices on the verge of going back to the $70 per barrel mark.
Next day post the budget which was declared by the finance minister yesterday, and back home it was a reaction which was quite a volatile reaction on Dalal Street, as a higher fiscal deficit target for next year as well as an introduction of the long-term capital gains tax hit market sentiment. The Nifty and the Sensex ended in the red. The mid-caps and banks also took a hit with the session, ending the session with cuts of over 0.5%. Manglam is here to tell us what we can expect. Well, Manglam, it's looking like it's going to be a start in the red.
Absolutely, Ekta. You got the color right, to be very honest, because yesterday we weathered the budget storm, but just take a look at the SGX Nifty indicates a cut of closer to around 140 points when I last checked, and that is reflective of the kind of moves that we're seeing in across the Asian markets. I was hearing y'all near 1.2% cuts across the Asian indices, and that's happening because across the globe, including the Indian markets, the US bonds as well as the German bonds, those bond yields have risen. The Indian 10-year went above that 7.6% mark yesterday. The US 10-year went closer to that 2.8% mark yesterday, and that is something that is spooking this. If you just took a look at the headline index, if you opened your screen post 3:30 yesterday, you would have thought that, you know, we weathered that budget storm, but the real picture lay in the mid-caps as well as the Nifty Bank, both of them down about 0.6%. And intraday, you said it was a choppy session. Well, intraday yesterday, the Nifty moved about 240 points on either side. That was the kind of swing that we saw. Even on the Sensex, around 750 points, and the Nifty Bank itself moved about around 600 points on either side. So very choppy was the day. Some of the mid-caps, the likes of Jain Irrigation, Madras Fertilizer, FACT, all of them which were expected to be beneficiaries of the budget, took a pummeling post the budget. But post markets, while the volumes were fairly good in yesterday's trading session, we realized that the FIIs, they were the ones who were responsible for bringing the markets higher and leading to the recovery. 1,100 crore worth purchase out there. The domestic institutional investors, though, pulled out about 360 crore rupees. In the futures and options space, though, the FIIs sold some contracts, about 169 crore worth selling there. The Nifty futures premium came off, and the put-call ratio, that fell down, telling you that there was a lot of call writing at higher levels. So with the mid-cap underperformance, one believes that maybe the upside for the index in the near term is limited. And the kind of moves that we're looking at in terms of the SGX Nifty, it merits to take a look at the 10,833 mark on the Nifty, which is the 20-day moving average. So perhaps that could lend some bit of support. But now going forward, the next big trigger, given the moves that we've seen in the bond yields and the kind of comments that we heard on the fiscal deficit, the RBI policy meet will be most important. That happens next week.
All right, Mangalam, and remember yesterday the volumes, they were second highest ever recorded, 15.5 lakh crore. But you're sounding quite gloomy, Mangalam, today. I'm waiting for your weekend recommendations actually, but at least some good news overnight, right? Virat Kohli hit a century, 33rd century, I think, and India ended on the winning end. But as you said, market's not looking too good, so we'll have to continue with some stocks in the news, isn't it?
We'll have to continue with some stocks in the news, and I'll keep Virat Kohli aside. Maybe he's happy smoking a cigarette, because ITC, that one should come up for you. There is no cigarette, change in cigarette taxation. A few of the brokerages have written interim relief for the company, just the way there was an interim relief for the Indian cricket team in South Africa after yesterday's victory. But sticking to the auto theme then, we have Ashok Leyland numbers that came by post-markets, 57% uptick on the revenues, 85% move on the EBITDA. The margins actually improved by nearly 400 basis points. So that is something which is a positive. Post-markets, we also got TVS Motors January auto sales, and out there we saw sales up by about 31%. So that looked pretty good. Titan, no great shakes out there. The revenue was up about 8%. Margins were at around that 10% mark. The street was factoring in 11%. The stock was lower in trade, so it will be interesting to see what the company does in today's trading session. CEAT, that one had a very good set of numbers. The revenues were up in double digits, and the margins also improved by about 90 basis points. AkzoNobel, weak numbers. Revenues were down about 4%. EBITDA was down by about 3%. And continuing the spate of weak numbers, we had a weak set coming in from both CCL Products and Cummins. Khadim, the recent listing from the footwear space, that one saw a good performance. EBITDA was up by about 40%, revenue was up by about 47%. Ukal Fuel too, the net profit almost doubled. InfoEdge, interesting move there. The company sold about 6.6% stake in Zomato for $50 million. That values the company closer to around that $750 million mark. And that is at the lower end of what the brokerages were pegging in terms of valuations. And finally, we have a lot of results to contend with. Bajaj Auto, Hindalco, Tata Global Beverages, as well as United Breweries. So we started with a cigarette and with a drink.
The Finance Minister Arun Jaitley delivered a political budget with the focus firmly on the upcoming elections. CNBC TV18 spoke to Finance Secretary Hasmukh Adya as well as Expenditure Secretary A.N. Jha to get a more detailed insight on the budget math.
Calculations are perfectly correct. I don't want to dispute it, because what we have indicated in the budget is that from the LTCG, our estimate is we'll get 20,000 crore in the first year. And from the surcharge, the cess, 1% increase in the health and education cess, by which we'll get 11,000 crore. So on the whole, total package is 31,000 crore. But we have given some concessions for senior citizens. We have given some concessions for individual salaried taxpayer and some small companies. So all this put together is about 19,000 crore, 19,000 crore. So net to net, of course, we are going to get an ARM, additional resource mobilization of 12,000 crore. But that 12,000 crore is nothing compared to a budget size of income tax of almost 10 lakh crore. So that is nothing. In fact, our next year's budget projection is 11 lakh crore for income tax. Now, increasing tax for 12,000 crore is nothing.
Okay, so you do take on board some of the criticism that's come in there from Mr. Chidambaram. But let me ask you, sir, because the government has now presented its fiscal consolidation plan, and you have decided to adopt the NK Singh Committee's report on the new FRBM. So that takes you to 3% by 2021. That is now going to be statutory, that you will have to deliver on that number. But one of the concerns, and this is highlighted in your own memorandum, sir, is what happens to the Uday bonds. The redemption of the Uday bonds has been highlighted by the government as one of the key uncertainties. And you say, and I quote from the document, sir, that this is an uncertainty and it's anyone's guess what the fiscal implications will be on states. Now, the Uday bonds amount to almost 2.32 lakh crores, sir. So where will this then leave the fiscal consolidation roadmap?
Well, there are two key recommendations of the NK Singh Committee which the government has decided to accept. One is taking the total stock of debt of central government to 40% instead of 46%, which it is now. And the second is the glide path, which takes us to 3% of GDP by 2021, as you mentioned. Now, we are well on track. We have accepted both this. In fact, NK Singh Committee had given us the liberty of increasing our fiscal deficit by 0.5, if need be.
Which you've done.
We haven't done fully.
A little less than that.
Only, we have done less than that.
Yeah.
We had full liberty to increase it up to 0.5%, but we have been fiscally more responsible, and we have decided to only use 0.3 instead of 0.5 in the current year. So for structural reforms, the committee had said the government should relax it if need be, but we have done it only partially.
So, Mr. Jha, can you give us a little bit more detail, sir? Is it 4,000 crores? Is it 2,000 crores? And also, I mean, what should we then realistically expect? Because I go back again to Mr. Chidambaram's press conference a short while ago, where he said that, you know, even the premium, so to speak, has not been provided for. And I understand that the modalities are yet to be worked out. But can you give us some sense of what this is going to entail?
As of now, the budget provision is 2,000 crores, which we have provided in the budget for 18-19. And as my colleague Finance Secretary mentioned, once the contours of the scheme is worked out, further provisioning will be done. And the model, whether it will be a trust model or an insurance company-led model, what will be the sharing ratio between the states and the center, that will be worked out, and then further provisioning will be done. So, but 2,000 crores is currently available in the budget for this scheme.
Could you not have been more aggressive on the disinvestment front, given the fact that you have your RE is 1 lakh crores for this year, sir?
Well, nobody can blame this government of being less aggressive on disinvestment because having put a target of 72,000 crore, if we have achieved 1 lakh crore already in the current year, next year also we just wanted to be realistic. We have put it at 80,000 crore, but nothing prevents us from making it 1.5 lakh crore if need be. We will be working in the direction of disinvestment, but the question is, instead of giving high-sounding target, and then market starts wondering if which company is coming into the market, and market is buttressed, we would like to keep it secret, and we just want to make a small beginning.
All right, and we also caught up with Neeraj Gupta of DIPAM and Banking Secretary Rajiv Kumar to understand the rationale behind the divestment target and if the government was open to higher FDI in banking as well.
I mean, outside of Air India, which has now been publicly spoken of, what can we realistically expect? When is the first strategic disinvestment going to go through?
7 entities are already in the expression of interest stage out of 24. I can assure you this process started after a gap of 12 years. It has to be professionally and meticulously taken forward, learning from the previous experiences. And they are all progressing very smoothly, including Air India. And I can assure you, you will find some activity on Air India reasonably soon. But if you see this divestment target, it is most ambitious so far. This year target is 72,500 and 80,000 is way ahead of that also. Keeping in mind that on an average, we used to realize 20,000 crore in a year, leaving aside last year and this year. So these targets are definitely pragmatic, and in case there is buoyancy from other revenue sources, definitely we may not require that to be raised.
That is the possibility of hiking the FDI cap in the banking sector to 49% for PSBs and to 100% for private sector banks. Is that an idea that is gaining any currency? Is that an idea that you believe is likely to be taken forward in any form or fashion?
As Secretary Deepam mentioned, that it's the investment which is one looking at. It's the value out of the government investment which one is looking at. So all options are open, but as of now, there is no concrete proposal of doing what, how much. That's yet to develop.
But all options are open. So you are open to the government, the finance ministry is open to the possibility of hiking foreign direct investment in the banking sector.
All options are being worked out. So
all options are being worked on.
The ultimate objective is that this recapitalization leads to very, very healthy banks, very, very prudent banking, very, very responsible banking. We have already established the ARM, which is for this purpose. So this will be decided as and when the boards approve their policies.
Is this a priority that you're now looking at, or do you want to see the health of the banking sector improve before you proceed with any consolidation?
All the options are available, so as and when the health improves, which will, so this will be looked at.